Welcome back, everyone. Next up, we have Stillwater Critical Minerals. It trades on the OTCQB under the symbol PGEZF and on the TSX.V under the symbol PGE. It is a mineral exploration company focused on its flagship Stillwater West battery metal project in the iconic and famously productive Stillwater mining district in Montana in the USA. Please welcome its president and CEO, Mike Rowley. Welcome back, Mike. How you doing?
Thank you, Anna. Very well. Glad to be back. Thank you.
Good. Take it away, sir.
You bet. Well, I'm very pleased to present at this mining-focused show the effectively third wave of critical mineral supply from a wonderful American and productive American district. That was a forward-looking statement, and I will indeed be making additional forward-looking statements. We are a publicly traded exploration company. We are funded and permitted in terms of our short-term objectives, near-term objectives. We have 100% ownership on 3 district-scale projects. That's unusual for a junior. All earn-ins are completed. And as you'll see from this presentation, our focus is very much on our Stillwater West project in Montana. The vision there is to become a primary US-based source of low-carbon battery and precious metals. Short on Stillwater West, 8 minerals listed as critical by the US government. We share the world-class geology of the Stillwater Complex with Sibanye-Stillwater, and we're adjacent to their mine complex. We released a robust inaugural resource estimate last October, 1.1 billion pounds battery metals, 2.4 million ounces PGEs and gold. And we have a resource update in the bag for later this year based on drilling last year. We have a high-grade gold project in Ontario. We have another PGE-Ni-Cu-Co copper project in the Yukon. That one is for sale, and Black Lake Trading has been sold to a new listing called Heritage Mining that's giving us good exposure to the gold space. You'll hear a heavy Ivanhoe connection here. We've recently brought in 2 of the best mines from Ivanhoe. And that Platte Reef term refers to the Platte Reef district of South Africa and Ivanhoe's Platte Reef project. The broad overview of the presentation, we will talk a little bit about market timing. There are terrific gains to be had in mining investments, but it's important to understand the stages and the timing of that, and we feel that time is now. Critical minerals, we'll talk about global concerns, and then within that, domestic supply and why there's a recession-proof aspect to that domestic supply urgency within that as we get away from global supplies. And lastly, why Stillwater Critical Minerals? The scale and grade of the Stillwater project are impressive, even the district, aside from our work. And then, of course, the location in a productive U.S. district and the team, which includes that Ivanhoe pedigree. So talk about timing and stocks in general. There's a multi-decade cycle that runs, well documented. This chart by Incrementum presents the ratio of the commodity, broad basket of commodity index against the Dow Jones, going back to 1900 and then up to this past April. And we can see wide swings with stocks being overvalued, commodities being undervalued, and then stocks being undervalued and commodities being overvalued. Where we're at now is a point where commodities are just emerging from being extremely undervalued. In fact, almost unprecedented by looking back to the 60s to find a similar level ratio, and turning up. And we've seen this in our work, traveling and presenting the company. Very little interest in these companies back in 2016, for example, friends and family for placements mostly. But increasingly, 2018, 2019, and through the most recent shows this year, a lot of capital coming back to the sector. It's very good to see. Capital's coming out of other sectors, real estate, cannabis, the bigger boards, for example. We welcome that, and we feel it's the right time, as this chart implies. There are significant gains to be had, even just to return to the median value in terms of commodities in general. That ratio is now at a multi-decade low. That's the point. Then consider the timing within the project stage. The Lassonde curve from Pierre Lassonde does a wonderful job of presenting the stages and value creation in mining stocks. Of course, they're divided not really into mining stocks, but into exploration and development, and then mining production. And that's not always understood, that it's almost two industries. In terms of the studies you're doing, you move from discovery through to resource, and then to preliminary economic assessments, and then preliminary feasibility studies, and then full-blown feasibility studies on your way to production. The risks shift from exploration risk through to technical and then economic risk. Your investor base moves from investors seeking higher returns through to institutional investors, and then finally mergers, acquisitions by producing miners. Along the way, your valuation shifts from perhaps 1 to 2% of in situ value for base metals up to 4 and 6% as you de-risk the project, basically. And ultimately, as a producer, you might get 5 or 10% valuation for metals in the ground at that stage. This creates an interesting chart for investors, and it's important that investors understand that there's often a premium put at the end of the more speculative period and as you move towards production. And that premium is very much in the favor of the investors if your timing is correct. So there really are two optimal entry points for mining investing. We are on that nice ramp up at the beginning. We have a terrific asset. We've put out an initial resource estimate, and we're moving up that Lassonde curve. The things in the immediate term that will drive us most of all, I think, are our priority items for the year. Full integration of that Platte Reef deposit model. And again, we've got Danny Grobler and Albie Britz from Ivanhoe to guide us on that. And then resource updates. We have a resource update in the bag for this year, and we foresee further resources in subsequent years. Also upgrades to those resources as we move and tighten the categories that we're in, and ultimately metallurgy work and other studies that de-risk a project. That's the value we can add to move up that peak. Of course, this whole curve is shifting with the broader markets as well. And as the market becomes more receptive to exploration stocks, this whole curve moves up as well. Rising tide floats all boats. Turn some attention to critical minerals. What are they? The U.S. Geological Survey has now listed 50 minerals. They were a little bit late to the table. Other countries were faster on this, but they're moving quickly now that they've done that. And they've basically listed non-fuel minerals or mineral materials that are essential to the economic or national security of the U.S. So they're using that economy and security word. You'll see that throughout their publications. And the majority of the 50 elements that they've defined are produced overseas, and that's the point. They've identified supply weaknesses there, potential supply weaknesses, and dependence on other countries. The Energy Act of 2020 directed the U.S. Geological Survey to update the list. It's important to note that we're partnered with the U.S. Geological Service at Stillwater, and in fact are increasing that involvement. We've all heard famously from Elon Musk of Tesla that they desperately need more nickel. That one has been singled out particularly, and it's actually our majority element at Stillwater. At current spot prices, we're nearly 50% nickel by value in our resource. Second would be palladium at 20, cobalt, copper after that. So we're focusing on nickel here. Nickel is an interesting one to choose because, of course, nickel got starved out in terms of the exploration effort, perhaps more than most other elements, commodities, during the past cycle. There are very few nickel projects in the pipeline. To have a nickel sulfide project in the U.S. with scale is very much of interest to major mining companies. Rising demand and the need for domestic supply of critical minerals. Deglobalization, climate change, and electrification are all separately driving demand for these things. Deglobalization in terms of countries quickly building domestic manufacturing capacity. This is true in the US, where they're building chip manufacturing facilities, for example, to diversify from Taiwan. Any number of other things too, battery manufacturing plants, for example. Climate change is also driving demand for commodities, and countries are recognizing this, especially true in Europe now, that green energy means energy independence. So windmills, solar cells, hydrodams, all takes elements. And the electrification movement in general demands a multiple of the current supplies of a variety of metals. This is not only in energy storage, such as batteries, nickel, cobalt, lithium, but also just in moving that electricity in a copper grid. And the US's grid, as Robert Friedland has famously stated, is woefully outdated and needs an upgrade in order to handle the expected electrification that's required. Environmental and humanitarian concerns also support domestic production. The majority of platinum comes from South Africa, cobalt from the Congo, nickel from laterite ores in Indonesia. And an important distinction there is that 2/3 of our nickel globally comes from Indonesia and these laterite ores. And that's a very dirty source for nickel with an order of magnitude greater environmental footprint. Sulfide ores are much cleaner, and sulfide ores in the first world, of course, are cleaner still. There's a high environmental cost and a high humanitarian cost sometimes in some of those operations. It is better to mine responsibly in the first world and to first world standard, and include things like carbon sequestration, which we have the right rocks to look at Stillwater, for example. Not going to spend too much time on that here, but this is essentially the potential to go for a reduced carbon footprint on nickel production, potentially even a net negative carbon footprint on nickel by pulling carbon dioxide from the atmosphere and binding it with the tailings as you put them in the ground, effectively locking carbon away for perpetuity in geologic time and benefiting from tax credits that are in place while doing it. Geopolitics, and national security concerns also support domestic production. China controls 80% of the global critical mineral supply. And I don't know how many folks know that. 68% when it comes to nickel, 73% for cobalt, and 100% for graphite. All of the graphite in our smartphones and cars comes from China. There's real vulnerability there. Russia is the world's largest source of palladium and also of nickel sulfide. And South Africa, of course, dominates platinum production. The U.S. is a net importer of dozens of commodities, the 50 that have been listed, and that's what they're pushing to secure domestic supply of. Won't spend too much time on this slide, but it essentially reinforces that funding is available increasingly, actually, and we are benefiting from that at Stillwater as the government moves to push for domestic supply. What does this mean for the prices going forward? This chart presents copper, nickel, cobalt, lithium prices anchored at 2020 being 100 on the scale here, and looking out 20 years, we see cobalt prices soaring and nickel prices rising steadily up to a triple of where they are now. It's very interesting to us, of course, as we have significant nickel and copper in the US. Nickel and cobalt, sorry. We also have copper as well. And in terms of the demand side of that equation that's driving those prices, the nickel portion of the chart here in 2020 is expanding very nicely by 2030 on an estimated basis. So let's look at critical mineral supply from Montana. This is a state that has been producing since the late 1800s, initially gold, then copper. In the World War I timeframe, Montana was the dominant copper producer in North America. Fantastic wealth came out. Chromium during the 40s and 50s, and then starting in 1986, palladium, platinum, rhodium from our neighbors' operations in the Stillwater Complex. And large-scale copper mining and smelting continues to this day. Rio Tinto is partnered with the USGS for a large survey for critical minerals in the Butte area. They are also working the Madison project, and Ivanhoe is at Hog Heaven as well. We are focused in the south of the state on some rare and beautiful and very large geology that is the Stillwater Igneous Complex, and we share that with Sibanye-Stillwater. And this is a claim block that's visible from space, and in fact, it's a geologic formation that's visible from space. Zooming in on the Stillwater Complex, high-grade nickel copper starting in the 1800s, high-grade chrome production in the war years, and then starting in 1986 and ramping up ever since, the production of platinum, palladium, other metals from underground mining. And then in 2021, we bring that Platte Reef thinking with our bulk tonnage battery metal PGE model to the table. Sibanye produced 570,000 ounces of palladium platinum last year and a further 750,000 ounces, including rhodium, from their recycling operations. What we bring to the table brings more scale in mining method and also battery metals. Sibanye currently produces nickel, but in small quantities. There's a look at the claim holdings in the district. We share the Stillwater Complex with a multi-billion-dollar major. It's a very rare position for a junior to be in. Stillwater Complex is a fantastic piece of geology. It is the biggest thing by far in the Western Hemisphere. It looks like the best parts of South Africa, the Bushveld Complex in particular. It is a layered system like the Bushveld. It is 40 kilometers by 8 kilometers on surface. It's highly prospective for a bunch of metals, and it's producing for over 100 years. It's currently known for the JM Reef deposit. This is a sulfide horizon cutting across your screen on the purple line that's shown there. It is over 100 million ounces of the highest grade palladium platinum in the world. Also includes lesser quantities of nickel, copper, gold, silver, rhodium, other elements. They mine it in 3 places, and they run a smelter, refinery, and recycling complex off the screen in Columbus, Montana. This is a great place to work. It's very rare for a junior to share a district like this with a major, and it's all because we started the acquisition in 2017 in the bear market when these things were possible. We brought different thinking to the district. Historically, folks were focused on those high-grade reef deposits. These are a more narrow deposit model. You can think of them a bit like vein mining, even though geologically the origin is different. We've brought what we're calling Platte Reef thinking in reference to the Platte Reef district of South Africa. Platte Reef hosts 400 million ounces, billions of pounds of nickel, copper, sulfide in a bulk mining model that's economically very attractive. It's always in the lower parts of these layered systems, and that's correct for where we are at Stillwater here. You're looking at the edges of a magmatic layer cake effectively, and it's been tipped on its side by Wyoming to the south and the Laramide event. And that's a benefit to us. It brings it all to surface, right? It expresses its surface. So we are applying Platte Reef thinking to this district. It's been talked about technically for decades. We're the first ones to systematically really go after it. Examples of Platte Reef mines would be Anglo American's Mogalakwena mine, giant 265 million ounces, and of course Ivanhoe's Platte Reef mine, 112 million ounces, billions of pounds of nickel and copper in sulfide. And you'll hear the Ivanhoe name again in reference to our team. We've just recently brought over as our Vice President of Exploration, Danny Grobler, who was exploring and advancing that Ivanhoe Platte Reef project before that. Taking a look closer at the resource area, in pink you've got the chargeability high, and in blue the conductivity highs from an induced polarization survey that we did over 2 years in 2020, 2021. These responses are very high level, and they cover the whole 12-kilometer core of the project there. This is indicative of very big bodies of sulfide mineralization. That's confirmed by the yellow bodies that you see there, which are the 5 deposits that we've delineated to date. So the 1.1 billion pounds battery metals, 2.4 million ounces palladium, platinum, gold, and rhodium sit within those yellow areas, and they're nestled so nicely within those pink and blue highs, geophysical anomalies. Terrific expansion potential here. They're open in all directions. And it's quite fun actually to grow this project. Called out some drill results. One hole in Chrome Mountain from 2020 returned 13.2 meters at 3.3% nickel equivalent. That includes 2.3% actual nickel, plus the additional 1% equivalent in other values: palladium, platinum, gold, copper, cobalt. That's a very high grade hit, and it's 125 meters from that second hole reported there, 8.5 meters at 1.7% nickel equivalent. That hole was 1.1% pure nickel, so as sulfide. So there's emerging continuity there, and we're excited about this. This has also brought us a lot of attention from bigger players in the industry. This was previously never documented before in the Stillwater Complex, and that's precisely why we're there. Both of those hits are located within, as you can see, hundreds of meters of what is likely bulk mineable mineralization, 0.3% nickel equivalent and 0.24% nickel equivalent. We see the same thing at our CZ deposit, which we've drilled now 2 different years, and also at the HTR deposit area in Iron Mountain. In both cases, you've got hundreds of meters of bulk mineable mineralization, and then within that, increasingly higher grades, bringing a selective mining scenario. So we have 5 Platreef style nickel, copper, cobalt, PGE deposits with significant expansion potential. And we have the gentleman from Ivanhoe to guide us in that expansion. Talk about our resources for a minute. In the base case scenario, using a 0.2% nickel equivalent cutoff, we have 157 million tons at 0.45% nickel equivalent. That's over a gram of palladium equivalent. That delineates 700 million pounds of nickel in sulfide, which is a significant addition to the US inventory of metals in the ground. 1.3 million ounces palladium as a second major value, and then on down the list from there. In total, 1.1 billion pounds of battery metals, 2.4 million ounces PGEs and gold. That's just a really robust debut. At a higher grade, just under 100 million tons at 0.55% nickel equivalent. And then if you go for a truly high grade scenario, underground selective mining scenario, use a 0.5% nickel equivalent cutoff, we still have 42 million tons, and now it's at 0.71% nickel equivalent. Grade has moved up nicely, and still over 500 million pounds of battery metals, nearly 1 million ounces of PGEs and gold. This is a robust debut, and it shows good optionality on mine model, and it's wide open for expansion. We have a resource expansion in the bag, and that's now in the works for later this year. We feel, if you've looked at our images from our news releases, we've basically laid out the basis for that expansion. Touch quickly on our commodities. This is an internally hedged blend of commodities. It's very compelling. It's about 2/3 battery metals, 1/3 PGEs and gold. By the prices used in the resource summary, October 2021, 42% was the dominant value nickel, and then followed by palladium, about 20%. These have shifted now with nickel pushing 50% at current prices. We used, I think, a $7 nickel for the study, and nickel is now, of course, sitting nicely about 10, even 11. So it is largely a nickel project, and that is actually what's attracting the majors. We have significant chromium. We've not yet factored that in economically, but the district, of course, holds the largest chrome reserves in the US, and it has historically produced chrome. So that is relevant at Stillwater. The objective, again, is to become a primary US-based source of low-carbon battery and precious metals. 8 of these commodities have been listed as critical by the US government, and we're doing this with a producer right beside us in a district that's produced historically. Senior management, myself, I'm a founder of the company. I've been in the industry since 1990. I want to call out Danny Grobler, second name on the list here. He joined us in April. He was previously chief geologist at Ivanhoe, leading the development of that Platreef project. He and the next name on the list here, Albie Britz, senior geologist, they both could have jumped to any number of juniors, and they chose to come to us, and that speaks volumes about the potential we see here at Stillwater. I don't know why we're jumping back here. Sorry, having to fight the system. Let's just do that. So these guys have joined us based on the potential they see in the project. Greg Johnson, of course, was a big part of Nova Gold, and that's the playbook we're using here. Bear market acquisition, build it out into a better market, bring new thinking, and look ultimately for a deal with a major, frankly. Nova Gold did that. They saw 10 cents a share become $2 billion in market cap very nicely. And Gordon Toll at the bottom of the list there, ex-deputy chairman of Ivanhoe. Again, that Ivanhoe connection. We made the acquisition in 2017. We've drilled it in 2019, 2020, and 2021. Upcoming catalysts, we've announced a few of those. Upcoming next are rhodium drill results. We're working on further agreements on secondary assets, particularly that Kluane one. Big ones will be the updated resource estimate, which is on track for later this year. And that's expected to be a big value driver. In addition, 2022 exploration results and ESG and metallurgy results. Capital structure, we are, like many, have come off in the market due to broader forces. However, we are funded through everything we need to do in the short term. We've got good warrants and options behind that, and healthy ownership by management, insiders, also institutions. We feel this is a great buying opportunity. As you've seen from insider reports, I'm buying. I think the bottom is in or near. And commodities, especially critical minerals in the US, make a brilliant investment, I think, at this point of the cycle. With that, I'll turn over to questions.
Great job, Mike. Yeah, thrilling time to be in your industry. Thank you for a lot of those stats. That's blowing my mind over here. Okay, we do have some questions. So this is a big project. What's your proposed budget next year, and how do you plan to fund it?
Sure. Proposed budget is in the works, but bigger than last year's is, I think, a safe estimate. The short answer would be sort of 5 to 10 million range would be ideal. Typically, a junior would fund that by successful results from the past year and then raise money at a higher share price in a placement and do bigger programs. And we've successfully been doing that now most years, perhaps this year excluded for reasons beyond our control. We're at a point now, and we see no reason why that won't continue to work next year. We're at a point now with the project that we may be able to engage that bigger dance partner. And we're having some conversations in that regard. With success on those initiatives, then bigger things become possible and more quickly. It's all down to the terms of a possible deal. So we'll do our homework from this year's results. We'll fully integrate that Platreef thinking into our geologic model, and we look forward to announcing plans in more detail in the coming months.
Great. Why hasn't Sibanye bought you out? Pardon me if I mispronounced that.
No, it is Sibanye.
Sibanye.
Yeah, we get that question a lot. They are our neighbors, obviously. They're producing right beside us, literally 2 kilometers from those Crow Mountain targets that you saw in our image. Do we want to get bought out by anybody at this price? We're only a 35 million market cap with an asset that we think is worth over $1 billion. How do you get bought out at these prices? I can't comment in particular about any particular conversation we're having. We do have the attention of majors. We have several majors under NDA at this point, confidentiality agreement. Can't comment on Sibanye directly, but they would obviously make a great partner. They're active in the district. They have the infrastructure. They're well liked locally. Their good neighbor agreement is a thing of beauty for the industry. And they are buying battery metal projects in North and South America and even in Europe, that plant in France that they bought. They are producers. They're not explorers. So we'll see what they want to do. Those conversations are underway, and we look forward to seeing where they lead.
So there's your answer. We'll see. Okay. Let's talk about the ESG initiatives and standards. I live in Oklahoma. I know that's a big topic of contention here in Oklahoma. What's it like for you and where you're located? Right.
Well, it's near and dear to my heart, first of all, because I actually have a background in environmental science, and that is what led me to mining. I've even patented mine water treatment systems, and I was piloting them in Butte in the 1990s. So being a progressive miner is near and dear to my heart. Montana does mining smart, in my opinion, from everything I've seen. And that's certainly true of Sibanye, our neighbor. Their good neighbor agreement is a thing of beauty in terms of working locally with communities. They mine very responsibly. Their operations are a thing of beauty, and they're looking at the carbon sequestration angles that we're looking at as well, where you're actually binding carbon from the atmosphere and putting it in tailings to further reduce your footprint. As an exploration stage company, there's limited what we really need to do in terms of ESG, except be aspirational and look to possible mining operations that we would build. We certainly govern ourselves to tight standards, and we're looking at things like carbon sequestration and diversity in our workforce. These things are important to us, and I think that's why the mining industry needs to look seriously at first world projects, frankly. You can enforce these things in the first world.
Right on. Adrian Cantwell wants to know, what are the advantages of mining metals on the critical list? Are timelines to eventual production shortened by permit streamlining or something like that?
Definitely. Yeah, that's one of the main things the U.S. government is discussing is shortened permit. And by shortened, they mean reducing redundancy in the competing layers of bureaucracy. Streamlining is the first obvious step. You don't want to compromise the final product. You want intelligent projects to be built intelligently, but you want to streamline that process of deciding what makes sense. And there's a lot of attention put to that. The government is talking increasingly about funding studies, geophysical surveys like you see Rio Tinto doing not far from us in Montana. And that funding is now coming to things like drilling, I think, as well. So the government is definitely there and definitely encouraging production of these critical minerals within the U.S.
Right. Telon Minsk and Sam S. ask, is there any government money available for critical minerals exploration and perhaps carbon sequestration? And are you speaking directly with any auto manufacturers at this point?
Yes, government funding definitely available. We've benefited from working with the USGS for years, and that is expanding. And we are now looking at the broader initiatives, the more direct initiatives as well, with the DOE and other parties. Yeah, we do have the attention of auto manufacturers. You know, Volkswagen was rumored to be circulating the floor at the recent PDAC conference in Toronto, and we see that they did a deal to tie up some nickel supply. So perhaps that rumor was true. We've certainly reached out. We're certainly in the right. We've certainly reached the right people to get their attention, and I think we'll see more vertical integration of supply from those manufacturers. They're very concerned with tying it up. If you look, physical nickel supplies are at a multi-year low right now, and there are very few exploration stage projects in the pipeline. The U.S. has one small nickel mine, the Eagle mine. It's shutting down in 2026 due to depletion. They've got another one coming online that's about the same size, and Elon Musk has bought all the supply from that one. So, and it's not much. So, you know, where is the supply is the question, and these companies need to move to tie it up.
Wow, fascinating. Casey Rogers wants to know, what's the timing to get to the PFS stage, and what has to happen on your end?
That is both a company decision and, well, it's primarily a company decision. We see a lot of potential to grow the resource first and to tighten the category of the resource as well before we get there. So we have a large inferred resource. We want to move that up through indicated and ultimately refine, basically closer drill centers, that kind of thing, and then start to wrap some metallurgy around it. I don't see us doing even a PEA study next year. Basically drill and expand that resource would be the focus. Subsequent years, sure, we can start to look at that. I think that's likely done with a partner on board, as it's going to be more of a focus for someone like that. This is a big property with lots of room to grow. That's a single thing I want to impress today. In terms of fast-tracking production, there's a producing mine 2 kilometers from us underground. You know, it typically takes, I think the stats say 10 to 15 years to build a mine in the U.S. I think we could shorten that where we are, given that infrastructure that's in place.
Fantastic. You mentioned nickel. So Joe Farrow has a follow-up question. He appreciates you starting with nickel. And given the increasing demand, are you seeing any acquisitions in that space?
Yeah. We saw the bidding war for Noront, for example, between Andrew Forrest and BHP. And that is a district, that's actually quite a bit like us. It's a district scale project with a relatively small area that's been advanced to a deposit. And the bidding war began, and Wyloo won, the Australian group won, and they're now renaming it and they're underway. That sort of thing is entirely possible here. This is a district scale nickel asset, and these are very, very hard to find. We're showing potential across 9 kilometers that's within 32 kilometers of total strike. Where else can you find that? That's why the majors are interested in us. M&A activity is beginning, to answer the question. What we're seeing, I think, in preparation to that is the breeding of a great number of nickel-focused companies. We're seeing a few companies split out their nickel assets from their gold assets, for example, and these new companies being launched. Some of them have nice grades, but size, you know, these nickel always occurs in magmatic systems, and magmatic systems of size and grade are very, very rare in the world. A lot of them are quite small. This is a monster. This is the biggest thing in the Western Hemisphere, and you don't have to take that from me. You can, as a layered magmatic system with 100 million ounces already in the district, this is significant, and it's in the Western Hemisphere. So we're glad to have tied this up in the bear market years, and I think that puts us ahead of a lot of our peers.
Bet you are. Chris Ford asks if you can talk about infrastructure. Do you need to invest any money in that, or are the roads and utilities sufficient for production?
Well, roads would need to be upgraded. We have forestry roads, you know, gravel roads in most areas. All the active areas of the project are covered by road, put it that way. In terms of infrastructure, it depends who our dance partner is as we're building a mine. If we're building a mine ourselves, or if it's not Sibanye, then some amount of infrastructure would have to be built. If Sibanye is our dance partner longer term, then they could literally punch through straight from the north, actually in that Chrome Mountain area from their East Boulder operations, and take it out their existing adit, right, and just upgrade their existing smelter and mill facilities. So there's a question there as to who the ultimate buyer is, developer is.
And Adrian Cantwell also asks, being adjacent to Sibanye, does that help with environmental studies information? Very much so.
This is all regulated by the Forest Service, us and Sibanye both. When it comes to permitting, forestry has been very good about just pulling an existing study off the shelf. And quite often it's worked by Sibanye, for example, or even a junior that was on our ground before us in the 2000s era. So yes, that's all streamlined. And in fact, we get permits remarkably quickly, faster than I've got them in other parts of the world.
Robert Friedland says, you mentioned Platte Reef and Ivanhoe, including the addition of geologists who now work with you. Have you been approached or had any conversations with that company or others in respect to potential arrangements?
Well, again, I can't comment on the particular content of any non-disclosure agreement we have in place. If you'd been at our core shack displays over the past few years, you would have seen people from basically every company that you can name that's active in the base metal, particularly base metal, sometimes precious metal space. So Rio Tinto, Ivanhoe, BHP, any number of others, Teck, would all have been there. And those conversations are ongoing in various ways. Some of them are under NDA. The Friedland connection is very significant because he did such good work proving up the Platte Reef mine in South Africa. And to have his team join us and choose to join us is fantastic. They each have 20 years of experience in exactly this geology. The same magmatic forces were at work. And being in the core shack with Danny earlier this year was just a privilege. He was very quick. Within hours of seeing the core in person, he's saying, this is 110% the same thing. Like, he knows what all this mineralization means. That's brilliant. We're benefiting tremendously from all that work that they did building this great mine halfway around the world.
Great. I believe this might be our last question. Adrian Cantwell asks, at what stage of future development will you be able to exhibit maximum value of this whole project with a view to monetizing that value for the shareholders? And in which half of which year might that be?
Bit of an open-ended question because it does depend on markets and when we see a deal that we like, basically. So the two possible long-term outcomes for this project are that we choose to build our mine ourselves, which is less likely than us simply engaging with a much bigger partner. Some of the names that we listed would be good on that list, and letting them take it to production. So the question is, when do you get a deal that you like the terms of? And that's our job. So yeah, in terms of building this out, this is a very big project, and we can't keep drilling it at the pace we're drilling it. We have to do bigger programs, and we have to ultimately engage that partner on the right terms. I think that's coming. It may even be in the next 6 months that we see a deal of the right type, but it may take a further 18 months. At that point, things would accelerate greatly. And at some point, it's on its way to being a mine. Yeah, in terms of the shareholder and the Lassonde curve that we just presented, we see terrific value gains to be had just in the near term here. You know, let the markets recover for starters, because everything is undervalued right now. Let us get our updated resource out, this full Platreef integration by Danny and Albie. Heritage is doing great work in Ontario. We've got some good results coming from this year's programs. Build that out into early 2023. I think it'll be a very different share price from where we are. Bigger programs next summer, results from that, and then ultimately that big dance partner.
Great. Well, exciting times in the near future. Thank you, Mike, for joining us again on our conference. Please come back again very soon.
You bet. Thank you. Pleasure.
Okay, everyone, stay with us. We'll be right back with our next presenter.